Well, the silver market has actually been in surplus for a few years. But what we saw last year was, as you pointed out, the highest surplus in our series back to 2010. And put simply, the decline in global supply, which was led by the drop in mine production, far exceeded the weakness that we saw in global silver demand, hence the size of the surplus we saw in 2020.
As many people viewed silver as more or less still a safe haven asset like gold. So why did demand drop so significantly?
Well, if you think about the impact of the pandemic, when you had widespread lockdowns, for example, this really hit, for example, the consumer electronic side. And so that was one of the reasons why we saw a decline in global industrial demand. But however, the decline in industrial demand really wasn't that significant because, for example, what you saw was an improving PV or photovoltaic market as the year progressed. In other words, the first half was pretty weak in the solar market, but the second half was quite strong. And in fact, PV demand finished the year a couple of percent higher than in 2019. So that's, I think, was one of the key reasons why global demand didn't fall as much compared to the drop in supply that we saw.
Could you comment on whether or not industrial demand than retail investment demand? Which of these is a more important factor to consider?
You know, being a true analyst, I would say there are merits to both. For industrial demand, it's the largest area in terms of a broad church of uses. It accounts for around 500 million ounces of silver. That's around half of global demand. So that's incredibly significant. And in terms of the year-on-year changes, they tend to be fairly modest. In other words, when prices, for example, spike, it can take a while for thrifting and substitution to really take effect. So when prices spike, demand therefore doesn't fall immediately. And so that's really quite important. Whereas for coin and bar demand, it can be far more price sensitive. In other words, when prices weaken, you see bargain hunting entering the market, and that can help to provide a floor to the price. So really, they do perform quite different roles in the marketplace.
Why aren't the mints using these silver products in storage to produce more bars and coins? If it is true that retail demand is still strong?
Well, I think it just takes, it's a question of the physical capacity of the mints to make the product. You know, there is the balance sheet considerations as well. So there's only so much silver that they can churn out in blanks or in product at any one time. And if you speak to the mints, I can tell you they are, they're working overtime. They are really pushing hard to get product out as quickly as possible. So be a mint that's making coins, or for example in the US, one of the private mints making a 1 ounce round, or a refiner producing a 100 ounce, 10 ounce bar, whatever it may be. Quite often they are working round the clock to get product out as quickly as they physically can, but there are just constraints about how much they can churn out at any one time.
There are many people from the investment community, from the retail investment community, who believe that this data is misleading, that there actually is a shortage of silver from the COMEX and from the LBMA. They cite the reasons that I gave you, like they can't buy silver, and so maybe they're hiding it. Can you address this theory?
I would, really struggle to agree with that. I think that the data for the LBMA and COMEX and others, one looks at silver held on exchanges in China, for example. This is pretty transparent. The silver is certainly there. But for example, if you're thinking about, let's take the US market, which for coin and bars, as I said, right now is just eye-watering in terms of the level of demand. And it's true that, if more product was available, it would sell. I think there's no doubt about that. But if you're looking at, the cost of, for example, taking silver off of COMEX, this is quite expensive. You're thinking about taking silver from London into New York. Well, this takes time to put it on a boat. This takes, a good number of weeks. But as I said, I think it comes back down to the point that, there's a lot of firepower in the US from a production standpoint. And again, the people that we speak to, like any manufacturer, they're looking ahead. What do they think demand is going to be? And so they are, trying to match their production with, where they think, the retail customers or where the retail interest will be. But silver demand is pretty volatile. And frankly, I would defy anyone to be able to match their production accurately to where demand has been, because it didn't just spike in February when, amongst all the social media frenzy. It has really stayed strong, and that's been a couple of months.
Let's talk about one of the new developments for the silver market this year, which is the emergence of retail investors on Reddit. Can you comment on this? Is it indeed true that the financial institutions have amassed large short positions on the silver market?
Well, I think what one has to do is to look at the data that the CFTC publishes on gross longs and therefore gross shorts as well. And so if you look at those positions, those short positions just aren't that sizable. And when we have seen them become elevated, you look back into history and you can see, precedent when they've been at that level. But in the current market, those short positions are just not that sizable. And so, when the initial, I guess, media storm and the social media really kicked off and, put its laser sights onto silver, yes, we saw silver pick up prices, no doubt about it. It just, it tiptoed above $30, and we saw huge demand. But, even at the beginning, we were writing that this, it wasn't going to work because from our point of view, there wasn't a short or these sizable shorts to squeeze out of the market. That yes, the demand was pretty sizable, but in the context of the silver market, really quite strong flows into ETFs, for example, as well as the coins and bars. So you had those two, at the same time. And so I think the price reaction that we saw quite well, it reflected those flows of, that buying. And, as I said, I think the reason it just ran out of steam is that, the silver market is a bit deeper. I just think it was not necessarily correct to compare it to the GameStop stock. It could to some extent. I mean, above ground stocks or bullion stocks for silver are still sizable. From our point of view, the key driver for price will be investment activity. And we do expect that to improve as we move through this year and, in fact, carrying on into 2022. But we are expecting for this year, prices to strengthen from current levels.